I bought everything, whatever you can think of, Dash and XRP and everything. And I used to keep this spreadsheet of what I bought, the price it is now, the value. I used to track the value in dollars and Bitcoin. But every day I focus on the dollar price. And there was a time when my portfolio was going up in dollars but down in Bitcoin, and I thought I was cool. I thought this was good. I was like, increasing in dollars. And then, market crashed. And at my peak, I always remember the numbers. At my peak, well, very close to numbers. In my peak Bitcoin, this is quite a depressing, the total value of my shitcoin portfolio went up to 186 Bitcoin. By the bottom of the bear market, I had 18 Bitcoin. And that to me was a real trigger of that was a real lesson. I was like, shit, the game was to accumulate Bitcoin. The game wasn't to accumulate fiat, which I had thought it was. And that was a gradually then suddenly moment where I eviscerated all this Bitcoin.
Yeah.
And I was like, And so ever since that moment, the game has constantly been to accumulate Bitcoin and kind of ignore the dollar price. Yeah, obviously, when it goes to $70,000, you're thinking of things I can do with that money. But generally speaking, and I haven't, and I don't think I'll ever get back to that Bitcoin number, which is frustrating. But it was a real lesson in the value of Bitcoin. Stop thinking of it in the moment and consider it in the long term. And so that was a real changing moment for me. Painful. But at least what we want to talk to you about is you've talked about gradually and then suddenly, and I'm starting to think a lot more about what then suddenly means. We had Tour de Meester in yesterday, and one of the questions I put to him is, I don't personally know what then suddenly means. I keep thinking of the current world, but we have Bitcoin rather than pounds and dollars, but it's possibly a very different world. And I don't know what that world is. So I wanted to get into that a bit more with you, but also talk about the then suddenly trigger. What makes that happen? And we've been talking a lot about BlackRock on this trip, and the reason we've been talking about BlackRock is not that we think an ETF is a good idea. We've seen the issues with the Grayscale Trust, and I know they're slightly different, but at the same time, locking up those pools of Bitcoin rather than people holding self-custody is worse. But at the same time, the number one asset manager in the world flipping to being a Bitcoiner, calling Bitcoin hope, saying it's money, saying it's the best money because it's global money. That is a signal to the world and signal to asset managers and to investors. But it could also be there could also be a signal there, because whatever you think about ESG, if BlackRock are going to want to promote the ETF, there's every chance they say that Bitcoin is positive on their ESG scales, which might flip further narratives in media. So it feels like it could potentially be a trigger that sends us towards the then suddenly moment. But I'd love to know what you think.
So I think probably most fundamentally, and not that it's not like it's weird because I'm not rooting for this, but I think when developed country currencies hyperinflate is the other side of when there's a rapid like the last cycle of Bitcoin adoption, that people in mass will turn to it when they have to, not when they want to. And thinking about when currencies fail, and there's currencies failing all over the world today. The Venezuelan bolivar has obviously failed. The Argentine peso has functionally failed. The Lebanese pound is failing. The Turkish lira is on the way. That those aren't the dollar, euro, or yen. And when those currencies are failing, everyone's first rational instinct is to adopt the form of money that's next best, which if you go to any of those economies, they're largely run on dollars, right? Anybody would love to get dollars or potentially even euros if they could get a hand of a euro, right?
Well, I'm off to Argentina tonight for a week. and I'm taking dollar cash and tether because I've been told ahead of time that is what you need. And when I was in Venezuela, I had dollars. And when I was in Cambodia, it was dollars.
Yeah, and so I think the same will occur with Bitcoin, right? That at the same time, people are, because it is rational. If your currency is losing 10% a week, adopting a form of money that's losing 10% a year is a better trade, especially if you need. Thank you, Danny. Especially if you need food tomorrow and power, right? But when like the end game of all of these currencies is hyperinflation, the dollar, the euro, the yen, the yuan, the ruble, all of them. But I think that when one of those currencies that's run by more of a developed nation or more of a developed nation currency, that's when everyone is forced to adopt Bitcoin because it's the only thing that works.
Did you hear all this?
No, I missed some of that.
So just the TLDR, sorry, Danny was getting coffee. The TLDR was as currencies hyperinflate, where we've seen in Venezuela and Argentina and Lebanon and now Turkey, they go to the next best currency, which is often the dollar.
Yeah.
But it's when the dollar fails.
There's no other option.
Yeah, because some people are going to Bitcoin rather than the dollar. We know, we see that. I mean, we see the charts. But they're not going en masse. They are going to the dollar.
Yeah. And realistically, I'd say the currency failures, they do cause Bitcoin adoption. But when we're talking about Bitcoin adoption at the level of facilitating day-to-day trade and 90% of it, that's not the type of adoption that Bitcoin is seeing. It's more rational at this point. It's people sitting around this table thinking long and hard about the question of like, is Bitcoin money? Consciously considering the question versus instinctively adopting a form of money in order to facilitate your needs tomorrow, a week from now, a month from now, right? So I think that's the point where, and realistically, I say this where, like when the dollar hyperinflates or the euro hyperinflates, it's not going to be a good day, right? Like I think that the further down the road that could happen, such that the infrastructure's in place, the more people that could have Bitcoin when that happens. But it is a related equation. When people are choosing to save in Bitcoin, they are impairing the demand for local currencies. And if you're saving in one form of money, you're marginally opting out of another. And obviously, we're not doing that all at once, right? But we are doing it on the margin. And as more people do that, the value of those currencies further deteriorates. And so it's kind of the reverse side of the same coin. But that, ultimately, like think about somebody who has, quote, has a lot of Bitcoin today. They got to eat, they got to get gas, they got to pay for power. So the other side of that is that event will probably be the greatest distribution event of Bitcoin ever. Because people who don't have Bitcoin but that have oil and gas assets or power assets or things that people need to consume that are of value, people that have Bitcoin are going to have to pay for it, and that will kind of be, in my view. And I also recognize that there's no I don't want to say peaceful. There's no transition away from a world of excess that's been built on fake money, where there's, in the U.S. alone, there's $93 trillion in debt-denominated liabilities. The U.S. federal government has $32 trillion of debt. Somebody owns those assets. A lot of foreign countries own those assets. A lot of pensions own those assets. Somebody's on the other side of that. And when it becomes clear that, say, $5 million in U.S. treasuries don't purchase you anything, like that's a bad day for whoever was holding that bond or the currency. So it's like I don't think that there's no such thing as a debt jubilee. Like look at every country that's experienced hyperinflation and ask, did like somebody get a debt jubilee there? But it will also be the sudden like the hyperinflation of the dollar will be the forced rapid monetization, because there will be a good form of money that's out there and available to people. They just have to be able to figure out how to get their hands on it and use it and trade it, and that the vast majority of everyone in the world will do that very quickly when they have to.
So what do you mean by that there isn't a debt jubilee? Because there have historically been debt jubilees.
There's no such thing as a debt jubilee.
Okay, why?
Like, just like ain't no such thing as a free lunch. It's it's like I can give you a handout, but if you're way worse off, did you actually give me a handout? So like
there's a consequence.
Like what I would say is, like, imagine somebody lived in Venezuela, and imagine they had a 50,000 bolivar loan, and imagine that they could go pick up a pile of bolivars and repay the 50,000 bolivar loan, but they didn't have access to clean water or healthcare or food anymore. Are they out of debt? Like, because the reality is that the people that are in debt, this is the thing, the people that are in debt, they actually get squeezed of everything. So imagine you have a $20,000 credit card bill. And if you have a credit card bill balance and it's charging you 18%, that means that you've consumed more than you've produced, right? And then something happens, you lose your job. So you had a job and you were already in credit card debt. Now you lose your job. At the same time that inflation is increasing, you basically get suffocated of everything. And then the currency isn't worth anything. So the point is that the idea that you can print your way to a debt jubilee, it's that the society, the economy as a whole, pays the price of a currency collapsing. And even people that hold Bitcoin can't, like, nobody's going to be able to avoid the cost. And there's this idea, I think if people drew a chart of like progress historically, they would draw as a meandering path up and to the right. But the reality is that wealth can be created and destroyed, and that everything's always at risk. So if a good currency allows wealth to be accumulated, and that wealth is in the form of higher quality of life, better things, less disease, better healthcare, whatever it might be, that the money is coordinating the trade, then on the reverse side of that happening, wealth is actually impaired or destroyed. That, like, every instance of hyperinflation that's ever existed, things got worse, right? Like, things went from good to bad, and that's the cost that everybody has to pay. So, like, when the United States is in massive amounts of debt and they're printing the currency to be able to get out of it, well, the debt that everyone's going to pay in the future is the fact that the money that they were relying on that got them all these things that they came to appreciate and take for granted are no longer there. So
but when this happened in Germany, the Weimar Republic, those people living in the border countries to Germany would be going into Germany and buying the assets or buying cheap bread and cheap goods and services. Is the equivalent of that almost like the Bitcoiners? Would there be a redistribution of assets and wealth from the fiat economy into the Bitcoiners' hands? Will companies become available? Say I, as a Bitcoiner, there's a company near me that during a hyperinflationary event cannot afford to continue, and there's an opportunity to buy their assets or company. Is that what we're talking about?
Yeah. You would give them Bitcoin.
Yeah.
And they would benefit because now they have a form of money that works. You give them a percentage of your Bitcoin. Now you have a business to run. Maybe you even need the person to run the business so they keep a job. Right. But it will be, I think it will be in certain ways like this. In other ways, it'll be like Bitcoiners are going to need to survive, not in like the Mad Max survival, but in terms of like Bitcoiners are going to need to pay for things like gas and power. And like, so like if those things are becoming more expensive and more scarce because there's not as much of it being delivered in the economy, then you're going to part with more of your Bitcoin just to sustain yourself. So it's not necessarily just going to be, in my view, it's not going to be just like taking other people's businesses. But in large part, it will be, or one way that I would frame it is, it would be Bitcoin repricing the world. I think I haven't read the article yet, but I want to. Alan Farrington wrote an article recently in the last couple of days called something about price and capital in the 21st century, where like basically Bitcoiners are going to restructure. People who have Bitcoin are going to restructure the world and saying like, that's a value, that's not. And they won't be the sole arbiters, because that group of people will be dynamic. But when you think about, I've got X amount of Bitcoin, and say there's 5 businesses that are failing, and you're like, I'm going to invest in that one. That is setting a price. And what you invest in might also not be valuable. You might lose all your Bitcoin, right? But that there's a lot of things that are, have price tags on them today based on a manipulated form of money, like the prices of homes in Austin, Texas,